Welcome to the Bold Money Revolution podcast. This is your source for straight talking, no fluff, business and high performance conversations that add real depth and value to the way bold leaders live, work, and thrive. I'm your host, Tara Newman. I'm here to show you how to optimize your performance as a leader so that you can grow a business that is profit-rich, efficient, and allows you to generate real, tangible wealth for yourself and others. We are here to help you lead with your values, to perform without overwhelm and burnout, and to do your most important work in the world. Hey there. Welcome to the Bold Money Revolution podcast. I'm your host, Tara Newman, and I am here today with my dear friend, Susanne Mariga, and she is a friend of the podcast. This is the second time that she has been on, and Susanne is a fellow mastery level PFP, and as a matter of fact, you can all thank Susanne for me becoming a mastery level PFP because remember that day, Susanne? You're like, come on, you're doing this.
I do. And actually, Tara, I always felt that you were acting as a mastery level PFP. You just needed a title. That's all. So you're just stepping into the role that you always played.
Thank you. Thank you. Yeah. She took me by the arm and she said, let's do the lunch and you're going to join. And you and Mashika were like, we're going to do this. And I was like, okay, we're doing this. So thank you. Thank you. Thank you. We're going to talk about accounting. We're going to talk about bookkeeping. We're going to talk about profit first. We're going to talk about the stupid tax. So you ready? First, let's tell everybody what your role is, what you do, and who you do it for.
So I am a CPA by background. I'm also a fractional CFO, and I primarily work with 7 and 8 figure businesses on implementing tax strategy, with implementing profit first, and really just scaling their business to the next level.
I think that accountants and bookkeepers are so important and integral to a business. And I also know that a lot of times people don't understand what they do, or they don't understand how they can really help them and have them benefit their business. But when I look at my accountant, who's my fractional CFO, he saves me at least 5% on my gross revenue year after year. And think about that compounding over time. That's a tremendous amount of money. So what does an accountant do for their clients?
So, in terms of
I think people think about it as you file my taxes, and it's so much more than that. So that's really where I wanted to go with that.
Definitely. And there are accountants that just file your taxes. There are people that people do come to at the end of the year, but unfortunately you don't get the value, right? Because all your deductions that are going to happen because of the course of the year. And I'm sure, Tara, you're probably sitting down at least monthly with your accountant and implementing strategy throughout the year in order to save that 5% of your gross revenues. And so really, when you're picking an accountant, what's really important is you're going to want to pick an accountant that you have a relationship with, one that can, not just file that tax return in a year, but help you strategize during the year. I always tell people, once December 31st comes, don't call me on New Year's Eve. I'm not going to pick up the phone. But, if you want to talk January 1st, even if you want to talk December 1st, we can talk and do some things with taxes. But it really is about having an accountant that you have a relationship with, who looks at your numbers throughout, looks at your strategy throughout, and really helps you go, these are some things that we can do. Now, I also think it's important to have an accountant that shares I would call a different mindset than a traditional accountant. A lot of accountants will tell you, I was talking to a client today and she's like, my accountant told me to go out and buy this $60,000 car. And she goes, I don't really need a $60,000 truck. I have a medical practice and I'm not like lugging around patients. But he said, you need a tax write-off is what he told her.
Insane. This is insane. People think this. Okay, keep going. Go.
Exactly. And I was like, maybe he's thinking he's going to do a bonus depreciation. It was just kind of like when you have a vehicle over 6,000 pounds, you can just write it off. But if you don't really need a truck, is that really helping you? Is that really helping you really live the life you're intended to do, right? Because, we don't want to have this payment that we're going to keep paying throughout when the tax deduction's gone. And come the show, I was actually looking at her return. He didn't even use the deduction. He just took regular depreciation. She got $2,000 off because he didn't need it because she wasn't profitable. But that's a whole different subject,
right? So she spent $60,000 to save $2,000.
Exactly. On a truck she didn't need and didn't even have the profitability to really be able to maintain this truck. She's asking me, should she sell it now?
Did she buy it new? Because that's really my next question.
Oh, she bought it so brand new.
Oh, people don't buy new cars. That's right. That's my pet peeve. Let somebody else take the hit on the car and go buy a car that's a few years old. Okay. So keep going with your story.
And so what you do is, you want an accountant that's really aligned with your goals. If you don't need trucks unless you've got like a fleet, right, that you need, for example, like if you're pest control and you need people that are out driving trucks, you want an accountant that's going to use tax strategy to build your net worth, right? So what I mean by that is don't just have me accumulate expenses, but help me build my net worth. For example, if I'm privately owned and it's a family type of company, right? Maybe we can do some things with a 401k. Maybe we can max out our 401k.
This was my next question. So this is like, so as a use case, did he have her put money in a 401k?
Absolutely not. He did not.
So like a SEP?
He did not.
What about her kids, a Roth kids IRA?
He didn't even think about that.
Okay, wait. So oh my God, this is so messed up, Susanne. Because if she took that $60,000 and put it like 20,000 into her 401k, and maybe she could put some up to 6,000 a year per kid into a Roth IRA for your kid or whatever, in 15 years, she would have had $165,500.
Yeah. Even if she had borrowed the money, right, in 2020 with a low interest rate, she probably would have made it back. But absolutely, it was terrible. Absolutely terrible. And so you do want an accountant that is in line with your values, that's creating wealth for you. Like what we just talked about, Tara, was, you're putting away money into your retirement accounts, right? You're getting that tax deduction, but it's not an expense, right? And you're building your net worth. And let's say you do have employees. And you want to say, I want to increase longevity, right? Because we all know the longer employees are with us, the more profits go up because they get better at their job. And, they can train other people that come in, and a longevity employee is a more profitable employee, right? And so, there's ways that you can say, you have to be with me for at least 2 years before you start to vest. And, we're going to have it so that you have to be with us for 6 years before you vest fully into a profit share plan. And what we're happening is we're taking a tax deduction year by year, but this employee has an incentive now to stay with us, to fully vest. And if they leave, then we just take those contributions, put it back in the trust, and then Tara, you're the last one standing. That's your money. That's your money at the end of the day. Meanwhile, you've got a tax deduction all this time.
Okay. So what Susanne is saying is that the right accountant helps you make really wise money decisions that increase your net worth over a period of time. And what I really love about what you shared initially, and it was like a light bulb for me hearing you talk about it, was that the right accountant is helping you be proactive and not reactive. And so, yeah, my accountant and I are talking on a regular basis, and he's saying things like, hey, I noticed that you're, outpacing the revenue that you had last year, and we're going to have to adjust your taxes accordingly, or it's time to do this strategy to reduce your taxable income. And over time, we've implemented a lot of strategies. Now they're just pretty much habits. These tax saving strategies have become tax saving habits in my business. And I still think, because I know that we're in a space and time where business owners are thinking to themselves, am I better off going and getting a job? And one of my things where I'm like, no, you're not, is taxes. You pay more taxes as an employee than you would pay as a small business owner.
Oh yeah, definitely.
right? You have more
Definitely.
flexibility in how you address taxes as a small business owner, allowing you to keep more of your money than if you were to be working as an employee for somebody else.
Exactly. And you can also align your expenses to things that you enjoy. For example, I'm not telling anyone to go take a trip unless you need a trip, but let's say I want to take a class to improve my sales skills and I want to go visit Tara because she's my best buddy. And what I can do is say, okay, Tara, I'm signing up for your course. I'm going to travel there and I'm going to spend some time. I'm going to spend some time enjoying the ambiance. I'm going to spend some time traveling in your area. And this is a tax write-off for me. Now I'm getting to see my friend Tara and I'm still learning, but now I can enjoy time off and take a vacation that I'm getting a write-off on. So that is really good. If I use my car for business, for example, not my doctor's office there, but let's say I use my car for business and I use it more than 50% for business. Now I can take I can take some of the depreciations that might be available, like the Section 179 that might be out there, and be able to deduct that and help my taxes versus an employee. You're just taxed on your gross. So you're going to have your Social Security and Medicare on everything. You're going to have federal taxes on everything. And there really isn't the ability to deduct. You can't even take a home office employee expense anymore. You're just so limited by so many things by being an employee.
Yeah. Yeah. And so what's the difference between an accountant and a bookkeeper?
So your traditional bookkeeper they're going to create financial statements for you. And, in terms of regulations and what they have to skill level, there really isn't a strict compliance requirement. So they don't have to go to school for bookkeeping. They don't have to have an accounting degree. There's no testing that has to happen with it. And so when you do pick in a bookkeeper, you want to pick somebody that comes highly recommended, that has done a good job, that's cut their teeth on it, that really knows what they're doing with that. An accountant, if they are a degreed accountant, or assuming they're a CPA at that point, they've gone through a test. They've got to have certain amount of hours. So they usually have a degree. It's a license that's required. So as a consumer, if something goes wrong, you can say, hey, I'm going to hold you accountable to your board. But they're going to do more analytics type of work. They may do some tax return preparation, tax strategy with you. Some of them do cross over and do some bookkeeping also, but it's going to be more of a higher level type of work and a strategy type of work that they're going to do.
Yeah. So I just want to recap. There are accountants, there are CPAs, there are bookkeepers. Bookkeepers are there to organize your books, your numbers, your receipts, your transactions, all the things that you might not want to do as a business owner. Although I suggest you do it for a little bit at least and really understand how your money moves in and out of your business. But that's what a bookkeeper is doing. They're tracking the inflows and outflows of money through your business, correct?
Exactly.
So that the accountant or CPA could then give you tax strategies and have a full picture of what's happening with your money. Now, caveat, because I fell into this trap, not all accountants are CPAs, but all CPAs are accountants.
Absolutely correct.
And depending on where you live, you might not need a CPA. You can have an accountant. However, correct me if I'm wrong, Susanne, the CPA signs off on the work on your tax forms. Like they have to sign something on your tax forms, or is that only in New York?
It's interesting. So if you are a CPA, the IRS has some requirements to be able to speak to the IRS or represent people for the IRS. One is you can be a CPA, you can be an attorney, you can be something called an enrolled agent. You don't require a CPA to sign a tax return. Like you can absolutely have your bookkeeper prepare your tax return, as long as they have a P10 number. Now, is that the best thing? I'm not sure, but
because this is where I got messed up. The accountant prepared my tax return improperly, and then I signed it, not knowing it was prepared improperly, and then I'm liable for that. However, if my CPA has prepared the tax return, they're liable for the tax return.
Exactly. And that's where we're going back to that licensing, right? That licensing, you get that insurance when you're using a CPA, somebody that's licensed by the board, that has taken the tests, that has gone to the school. You are going to get a different quality, hopefully, than if not. Now, I'm not saying all CPAs are equal, but you're hopefully you're getting a better quality having gone through that process.
I think what you're saying around the insurance is such a good way to look at it. Like it's an additional layer of protection, because I don't know what an accountant puts on my form or not. I mean, like, I'm not an expert at that level. For me to check the expert would be unreasonable. So I would want the expert to have skin in the game for preparing the return properly. That's what I'm saying.
Exactly. And most accountants, they worked hard for their license, CPAs. They're
very
not
hard
going
test.
to want to lose that. So they're going to be above board. There's also a continuing education requirements. They have to take so many hours of continuing education every year in order to maintain that license. So it's a pretty strict requirement with that.
Yeah, for sure. So then how do us profit first professionals fit into this mix? Because what's the difference between cash flow and accounting?
So accounting is very historical. So it's taking what you did a day ago, a month ago, a year ago, years ago, and creating things statements, reports that can be analyzed that may be predictive of your future performance. Cash flow is monitoring what's coming up the pipeline. Am I going to be able to afford the current situation that I'm in? Do I need to adjust my strategy so that I can make my limits? So it's almost like a predictive forecasting is what it is. So it takes those historical numbers that have been prepared by your bookkeeper or accountant or CPA, and it creates a model of, I love how we talked about earlier. We have the good, the better, the best, and it allows you to predict those scenarios based upon your historical performance.
Yeah. So I have a really good example how Profit First saved my behind and I love my CFO. He's my best friend. He's great at what he does, but because he was looking at things through an accountant's lens, he was missing an error that was happening that I spotted in the cash. So what happened was, and there's a whole podcast episode on this, by the way, folks, and I can link it in the show notes. Just real high level, it was the beginning of the year and my payments change over. So like they always kind of like my cash flow seems weird because maybe I was getting a lot of payments in the beginning of the month, but now they've migrated and now they're mid-month or whatever. So it was in January and I'm like, I don't know. I say to my team, cash flow seems something's off. And everybody says to me, no, it's just like the payments switching around. February comes around and I'm like, folks, something has got to be wrong. And they're like, no, it's just the payments. And the accountant's like, no, it's the this, it's the that, right? Now, it doesn't matter. If I look at my P&L, that's not going to tell me if I have a problem. That is a retrospective. But in the moment, I know that I'm having a hard time paying bills that I have not had a hard time paying before. Right. So finally, month 3 comes and it's like this perfect moment where I'm like, something is wrong. And a client messaging me saying, I'm sure you've noticed, but I haven't made payment in 3 months. And I was like, no, I haven't noticed, but yes, I have. Right. So I go back and I said, okay, we have a problem. It wasn't just her. It was multiple clients. And this is why I didn't have cash flow. But my accountant was like, looks fine on the P&L. And he came back and he said, I will never do that to you again. You were right. So for those of you who are like, why do I need cash flow versus why do I as a business owner need to understand my numbers and my cash flow versus having an accountant, both are important, but one is like instantaneous if you really start to get to know your numbers.
Oh yeah, definitely. And a good accountant that you're working with, they're going to help you do a predictive model. So, and many, Tara, I know in your case, you have several clients that work with you on a month-to-month basis, right? And so you can predict what that cash flow would be. And so anything that's short of that amount that you're predicting, it needs to be accounted for, right? I know one of the things that we do in our practice is we have a number that we're expecting to hit, especially from the monthly cycle.
Yep.
And we know the clients that make up that number. And so that first of the month, we're reconciling it back. We're reconciling to if there's a difference between a prediction versus actual, we're going to know exactly where it happens at within the next hour. So again, it's building in those financial systems to detect when things are off that way. I know another thing that we do on the expense side is we list out the actual expenses. I'm not talking about just a budget, but vendor by vendor, what that amount is. So if something's coming through the credit card that's not on that list, immediately my office manager is like, whoa, that's not an approved expense. Do I need to go ahead and refute that with the bank? Right. Because it's not on the list. Is it on auto renewal? Right. And, what do we need to do to course correct that? So it's really creating a predictive model based upon your past performance and controls in place to detect that.
Okay. So you need both Profit First, which is a cash flow management system, and you need an accountant, and you may or may not need a bookkeeper, depending on if you want to do those entries and that number organization alone. I've actually put out a pretty firm position recently that says if you are a business owner who can't bring themselves to look at their bank statements or their credit cards, then you don't have any business running a business. What do you think?
I think that's very true. And the reality is, I do budgets every day, right? I do budgets every single day. But when I do my own budget, it's personal. I mean, I tell my husband, I was like, beware, I'm going to be in a bad mood for that first 3 weeks of the year when I get through this. I think I actually put a post on it. Accountants have bad days too. And the reason why is, you're constantly having the course correct. You're having to look at, I once loved working with this partner. They were my best friend. And now it doesn't work with the budget. And I have to make a decision on, I can't keep funding this. I can't fund this through debt, right? I don't want to accumulate debt. So it has to fit in that budget. And that might mean breaking ties with things that made your life just a little bit easier or people that are programs that you wanted to be in. And you have to make those hard decisions. But doing a budget is hard for anybody because budgets are personal. And it makes it easier when you have somebody else to go, do you really need this? Or they're asking you, what is the ROI? But it's a very personal thing. I always say I'm in a bad mood every January for the first 3 weeks because that's how long it takes for me to work through the whole budget.
Yeah, I think that's really fair. Like we're in this too. We're in this with you as well. I think people forget we're all humans and we all put our pants on one leg at a time. But you said something that's really important. Constantly course correcting. I am in my numbers weekly, if not daily. And that is why this business runs successfully. That's why, despite health issues that I'm having right now, and I'm cutting back on my work hours, I can, because I know what those numbers are. I know what targets I have to hit that are bare minimum, that are just good, that better and best. And I know what it means when I'm at that good number, and I know what it means when I'm at that better number, and what it means when I'm at that best number. And that really scares me when we have business owners who are avoiding their money, which is why I said, if you're going to be in a state of avoidance, how do you know you're in a state of avoidance? You're not looking at your bank account statements. You're not looking at your credit card statements. Then you really have no business running a business because it's going to cause a lot of financial harm for yourself, but also others, the people who you are transacting with and doing business with. Now, you talk about the stupid tax, which see, Susanne's like, her face is like, yeah, I do, but she doesn't really want to own it. It's so funny. So let's talk about the stupid tax, which I think is great. And if you're offended by the word stupid, we are just having fun here. We're just having fun. Don't be so easily offended. So what is this? Let's talk about some examples of the stupid tax.
So the stupid tax, what it is, it's, it's a phrase, oh, I made that mistake and I had to pay stupid tax, and what I did was, it was like a joke. It was like, if I could just do a short video series and we're talking like awful video series. I'm talking about holding a selfie camera up to your nose so that I had to have like stuff edited out. Okay, Tara, literally ooh, that's a bad view of the nose. Can you put a heart over that or fire or something? And what it was about is things that I have observed as a CPA and fractional CFO of business clients every day making these mistakes. And it didn't matter how big the client was. In fact, I would say the bigger that they were. So when you get into the millions and, governments and things like that, they actually make it more, right? And it actually goes undetected because of the layers that it has to go through. And small businesses make it too. So it didn't really impact size. It's just common things that people do. And we're still releasing the series. So I think now we're like on video 3. And so, and every week I just dropped something that was related to the stupid tax. And the first one was, and I felt this because I was doing my own budget, right? That was the auto renewals. And especially like those annual auto renewals, the ones that don't even warn you that they're about to charge $4,000 to your account. They just like suddenly charge $4,000 to your account. And I'm like, I didn't even know that thing auto renewed. And it was about written in that contract because, as business owners, we're just so quick to get that software, that DocuSign. And we're like, I don't even know, we just skimmed through it and hit like sign. And the problem is we don't even know that we're selling our firstborn when we filled out this contract. We didn't know that there was an auto renewal contract clause. And not only was there an auto renewal, since it's annual, it says we earn the money as soon as we draft the funds, meaning that 5 days from now, I can't argue and be like, hey, give me my money back. It's already auto renewed. And the way that contract was written was they earned the money the day they drafted the funds. And so that was like the first one was, because I went through like massive auto renewals like in January as I was doing my budget. And it was about making processes in place that you catch those things that are happening. You stop them. Like, when does the software renew? Reading the contract before you're signing it, making sure that you have notes in your files of I need to call and cancel this 30 days before it auto renews. The second one that I did was over, and it was so funny. I had taken one of my best friends to a spa in Chicago, and it was a very high-end spa. We're talking like ballet, hotel. If I told you guys the name of the spa, you would jaw drop. And we went to the spa. The bill was probably like $500 because we had massages, wine, all that fun stuff that happens when you go to a high-end spa. And the spa, because it's connected to a hotel, they said, we're going to offer you valet parking. It's not free because it's Chicago, but $25 because you were visiting our spa. And, because it was 3 friends together and we separated our ways, I said, friend, you can take the receipt, for your parking and, we'll figure it out as we go down. I go down to the parking garage and the guy is like, oh, I can't give you discount parking. I can't give you discount parking because, you don't have a receipt. And I'm like, well, I don't have a receipt, but I have it on my iPhone where it like asked me, do I approve this charge? The fraud alert. And he's like, I need the receipt. I need the receipt. And of course, he's thinking I need to protect his job. Right. And I'm thinking, I just want to get my car and go. All right. And we're arguing for 10 minutes. I ask him to like call the spa. He calls the spa is closed because we were the last client to leave. I tell him to call his manager. He can't reach his manager. And at the end of the day, I'm sure the hotel would have wanted me to have the best experience ever. They probably would have wanted me to come back next week and drop $500. But because of this person that made it so hard to just get out of like the garage, I'll never be back again, which is complete opposite of what the hotel wanted. And it was about training your employees to think in line of your values, to think about, okay, what happens when something happens outside of the normal process? What is the end result that I want my client to experience? And then teach them, okay, it's okay to go outside of the box. It's okay to go outside of the rules. Get a photocopy of her driver's license if you need to. So she comes back next week doing the same thing and she's really parking there for work. You've got proof that she's done it, right? You can make a different decision. But in the meantime, so really it's about things that cost entrepreneurs money that they really could have avoided, right? Could avoid it with having processes in place to catch the auto renewals, having processes in place to empower your employees to make decisions that are outside of the box, and really just things that I've noticed that happen that are related to that. It's just a leak that doesn't need to be there.
Yeah. Yeah. I think another one is like, I see like testing marketing and the marketing doesn't work, but you're not sure. So you're just going to still keep paying for it just in case. What if it does? But it's like, there's no ROI coming back from it. I've made that mistake and have just let the experiment go too long, or flat out have done something that didn't get a result and thought, well, let me try it one more time and see if it gets a result. Like maybe it'd be different this time.
Oh yeah, definitely. And, I think the third one this week talked about hiring people that are just not able to do the job, right? And I talked about bookkeepers, for example. I've been contacted by many business owners, and they're like, we've got this bookkeeper, and I don't know why I have negative cash on my financial statements because my bank wouldn't allow that to happen. Can you just work with her? Can you clean up the mess so I can get my taxes done? And again, if they hire the right person that had the right experience, they would have to pay double to get this cleaned up.
Yep. Fix the mistake that somebody else made.
Mm-hmm.
Yeah. There's a lot. And there's a lot when you actually start to listen to advice from a social media app that's like very, very costly. I saw a CPA post one today. I nearly laughed my butt off. He screen grabs what somebody posted and then said, like, listen, make sure you're getting your advice from an expert. And it was like, hey, fellas, something like put something under an LLC so you don't have to pay child support. Like, it was the funniest thing. Or like, I've seen like people say, like, put your house in an LLC so you can like make a deduction for your business or something like that, like weird things. So, I highly, highly recommend that you don't get your business advice or your accounting advice or your money advice or your investing advice from social media, from TikTok, from Instagram, because that is also very costly. That is a stupid tax.
Yes. If you got somebody that's dancing as they're giving you tax advice, by the way, it takes different sides of your brain to do that. They're probably not very strong on the tax advice side.
It's wild. It's wild. All right. Do you have any others?
So, definitely they'll have to tune into my LinkedIn account to catch the other ones. They are dropping week by week. Awesome.
All right. So we are in a weird economic time right now. We are neither. So my interpretation of what is happening is it is neither good nor bad. We're actually like in this weird limbo position, and people are just waiting to see what happens, waiting for maybe the shoe drops or maybe it doesn't. And it is really clogging up the works. It is slowing things down. It is preventing people from taking action. What would your advice be from your area of expertise right now for businesses who are going through this?
So, it's interesting because, I think I talked about it earlier in January. I'm always in a bad mood in January because it's budget season. And I was in a bad mood. And the bad thing about when you're doing your budget is you can allow, if you don't stop yourself, you can stay in that negative mode. And it's not just a negative mode, it's a scarcity mode. It's a mode of not having enough. And it starts to really impact your ability to expand or see even creatively, right? Because you're in this mode of like preserving and preservation. And it was interesting because, I'm a coffee fan and I really like this company called Dutch Bros. And it's a little bit different in Starbucks because, you go there and they're broistas. They don't have baristas, but they have broistas, they're bros. They talk to you. And sometimes that's good. And sometimes that's bad because depending on how long the conversation or how weird it is when they started off. And my broista, she's having a conversation with me while I'm waiting for my lavender coffee. And she's like, how's your year so far? And I'm like, should I tell her the truth about budget season and the mood I'm in? And I said, I'm going to give her the PC side. I'm like, it's been a good year so far. And she goes, how do you think the year is going to be? I said, who knows what it's going to be like? And she goes, you know what? She pauses for a minute. She goes, I think it's going to be a great year. And for a moment, what it did was it changed everything. It just triggered everything different. And what she did that I didn't realize, Tara, what she actually drafted for me. And when I drove away, I said, you know what? It's going to be a good year. It's going to be a good year. It may be hard right now, but it's going to end up in a bag. So let's talk about some practical things that we can do. And I think, Tara, you brought up something really good. What was working in the past, right, may not be working. We don't want to get into this test cycle where we make things last too long, but it's important to mitigate your risk. So, what that means for us personally is, we're not investing in the heavy Facebook ads this year. We're not doing that. And because it's too risky. Facebook iOS 14 has happened. It can't target. We're not going to do that. And so, we're going to look at ways that don't have the risk, but still do the expansion. So we had Tara, she was actually one of our guest speaker at one of our classes, and she gave us some really amazing ideas on email marketing, which I really liked. Again, it's cost effective. And, depending on how good you're at copy, it still gets the message out to a few thousand people. The other thing is, it's about relationships. I think one of the things that we saw in 2020 was everybody was claned up, right? Everybody was at home and they were on Zoom. And like, I'm going to tell you, I can't stand another Zoom meeting. Like my tush actually hurts the moment I sit down for a Zoom meeting. And what people are craving is they're craving connection. They're craving, I want to see you. I want to see you, shake your hand. I don't know if I want to shake your hand, but that's what they're thinking, these people. And so it's about getting out there, going to networking events that we may not have been to before. People don't want to sit there and listen to you on Zoom. They want to see you guest speak, right? And so, in the past couple of years, I've declined a lot of speaking engagements. This year, I've already accepted 2 in the last 2 weeks. And so I'm going out there, I'm getting my seat on, I'm going to have to work on my middle tire around my belly to get that looking good again. But I'm going to be working on that. And I'm going to be meeting people, right? I'm going to be out there social. And by the way, what industries are doing good? If you notice, like everything else may be down, but travel was up, right? Travel was up. People want to get out there more. And another thing that people are looking at, they're tired of this service of one to many. They're tired of that. They want to see you one-to-one. They want to know that you care about their business. People are looking for a more boutique experience now. And so catering your business to give people what they need and what they want, mitigating your risk, but not necessarily spending money in a way that is risky. Is a different way to look at it. But like my Marisa said, it's going to be a great year in 2023. So get ready. Hold on.
I actually agree, because there is, we are seeing very confusing indicators, but the economy is actually strong. So I think that people are conflating news headlines and making things to be worse than they are. And if you're going to be someone who's running your business based on news headlines and not really understanding on a deeper level what's happening, you're going to get left out in the cold, because you're going to be in a place where you're in decision fatigue, you're not making decisions. People like me and Susanne are just going to be moving right past you, because we're going to just keep doing the things anyway. Like, it doesn't matter what the economy is doing. Susanne and I are going to be claiming our due and doing the things that we know work for us. And we're just going to keep putting one foot in front of the other. I think where things get really confusing, I know a lot of your businesses aren't necessarily in the online space. And I always have to contextualize this, because every business owner that I know, whether they have a brick and mortar, whether they have a business that's run virtually, they still open an app and get information and see what's going on, right? But the businesses that I work with that are brick and mortar, that are, I don't want to say in the real world, that's not what I'm trying to say, but function outside of a very small echo chamber online, are actually showing huge growth, like 20%, 30%. And here's the kicker of it. And I know you work with businesses like this too. These are not tech startups. These are everyday, boring businesses. They're manufacturing, they're construction, they're distribution. They're just businesses that business for decades. Plumbing supply. Like, right? Are you seeing that too?
Everybody, you still need a plumber, right? You still need a plumber. And there are sectors that are doing better than others. We talked about travel. Everybody's got cabin fever right now. And I'm sure Disney's about to blow it up. Right. And, so there are, but medical is still doing extremely well. So it's about knowing and pivoting to where the sales are going to be.
Follow the money.
Exactly. And don't let what is going around with you really cloud you.
Yeah, for sure. All right. So if you we're going to leave my audience with a tip or a takeaway or something from our conversation, what would you really want them to focus in on?
So I'm going to go back on stop the stupid tax on that. Because I think we all got a nice trip on that is, we've talked about accounting and bookkeeper. Hire for what your need really is. Don't hire for the potential of the person, hire for their ability to deliver now.
Yeah. Oh, that's a good one. I've made that mistake. Yeah. Hire for their ability to deliver right now. And more on the stupid tax, we have a how to plug your money leaks resource for you that we can link up in the show notes that really helps you with what Susanne is doing, but also go follow Susanne and find out what the other stupid taxes are in this series. So how can they follow you, Susanne?
So the best way is just to go on LinkedIn, and that's where we're dropping the videos at. Just look for Susanne Mariga and you will find me. And every Monday, we're dropping another video to stop the stupid tax.
I love it. Thanks for coming on, Susanne.
Thank you, Tara.
If you found this podcast valuable, help us develop more bold leaders in the world by sharing this episode with your friends, colleagues, and other bold leaders. Also, if you haven't done so already, please leave a review. I consider reviews like podcast currency, and it's the one thing you can do to help us out here at the Bold Leadership Revolution HQ. We would be so grateful for it. Special thanks goes to Stacey Harris from Uncommonly More, who is the producer and editor of this podcast. Go check them out for all your digital marketing and content creation needs. Be sure to tune into the next episode to help you embrace your ambition and leave the grind behind.